I'm Jeff Pospisil, the 10-Minute Treasurer with practical advice for improving your church's financial future. In this video, I'm going to talk about a provision in the CARES Act that allows a church to pay down a pastor's student loans, or actually you can pay down the loans of any church employee. You know, most of the CARES Act, it really overshadowed this one because it was all aimed at providing relief so that you'd have more cash to continue operations. So you think the Paycheck Protection Program, the student loan deferrals, all those retirement provisions. There was a lot of stuff for if you were going to be low on cash. This provision is if you have excess cash, really, as an organization. And you might think, how could anybody have excess cash? Well, I was with one nonprofit earlier this month, and they were looking at their finances, and yes, revenue was down a little bit, but expenses were way down. And so they were sitting actually very well financially, better off than expected. And they wanted to do something to give a bonus or some kind of a recognition to their employees. And I mentioned, you know, what about giving them some tax-free student loan help? And they honestly ignored it until I said it like the second or third time. And then they said, Jeff, tell us more about this. And so that's what I'm going to do for you guys as well. What's in front of you is from Westpath's summary of the CARES Act. Westpath is the pension and health arm of the United Methodist denomination, and they did this awesome 38-page summary of the provisions, which is written in a way that you can understand it without diving too deep in the details, and I'll link to that below. But the key part of this is you can now give up to $5,250 to pay off an employee's student loans. So $5,250 for 2020 only. It expires unless they do something to renew it. $5,250 to pay down a pastor or a church employee's student loans, completely tax-free. When you dig down into it, though, you do have to have it as part of a Section 127 plan, and that deals with education assistance. And how this one was before, it was if you wanted to provide in a tax-free way for an employee to go to school, so to further their education. And that's what it used to be. It couldn't be for student loans, which was education in the past. It was for current and I guess future education expenses. And what I did is I put together a template, so because you have to adopt a written plan, and I put together that template that you can just plug in the church's name, the dollar amount, and that should be good to go. I'm just going to walk you real quick through the step-by-step process and how to do this correctly and hopefully be by the letter of the law. First thing is you got to decide an amount, and this isn't like bonuses or anything else where you can give this size of bonus to the pastor and this size of bonus to the treasurer or anything else. You can't say a seminary degree is more important than an accounting degree or anything like that. This is one amount that you got to decide on for everybody. The next thing you got to decide on, does it include part-timers? My understanding is that you can exclude part-timers, or you can choose to include them and maybe pay them at either the full amount or a prorated basis. So let's just say it's $4,000 and you got a quarter-time position. Well, then maybe you just need to provide $1,000 to the quarter-time position. So that's something to decide on as well. Next thing you need to do is adopt a plan. And again, I have a template, and all you have to do is fill in the highlighted areas with your church name and the amount, and maybe you might have some other small adjustments, but that's all you have to do. Just get it officially filled out and adopted by either the SPRC or the church board, and then you should be good to go there. With the Section 127 plan, you also have to make sure you communicate it to all your employees. And so that plan that I have for a template, all you have to do really is print out a copy for each employee, and there's a place for the employee to sign off that says they understand that it's been communicated. So that's the way to cover your butt there. And last one is make a payment. And I'm going to warn you, don't reimburse the pastor or the employee. Don't to give them the money so that they can make the payment. Make the payment on behalf of them. That's the safest way to do it. That's the best way to avoid any kind of something going really bad. So get the loan information, where you make the payment to. Maybe if they got a coupon book, I doubt people have coupon books anymore, but maybe they do. But whatever you need to make that payment, you cut the check to the student loan organization. So probably Sally Mae or something like that. And that's how you do that. So I want us to look at the math, exactly why this is such a great benefit, because it is an awesome benefit. So let's just imagine that you were planning to give $2,000 to help your pastor pay down the student loans. So before, under the old rules, it's $2,000 you would give them, and then as a result, they would owe self-employment taxes at 15.3%, which is $306. And if they were a lay employee, this would be split, half for the church and half for the employee. So, but either way, there's a chunk going out for Social Security, Medicare. And then there's the federal income tax, and most of them, I'm going to guess, they're at the 12% tax bracket, so that's $240 there. And so their net benefit is $1,454. And I'm not going to dog this. This would be an awesome thing for a church to do. But it's still $2,000 to reduce their student loan debt. But then the federal government is going to get $546. And I almost want to say to make them rich, but really it just encourages them to spend more to probably even get more into debt. So, but either way, the federal government will end up taking $546, almost a quarter of the value of this gift. And now here's what it looks like now. After, or at least for the rest of 2020, you give them $2,000 pays off that amount of their principal, and the federal government gets nothing. It's just 100% benefit, no tax liability. And so if you're finding yourself, maybe it's in November or December or whatever, you're finding yourself in a position to pay a bonus. Maybe it's $1,000, maybe it's $500, whatever it is. This is something to think about if your pastor has student loans or your church employees have student loans, because it could be a tremendous benefit for them. I hope you enjoyed this video and found it beneficial. Again, this is a part of the ministry of the finance office of the Dakotas Conference of the United Methodist Church, as well as the Dakotas United Methodist Foundation. And if you did like this and found it helpful, like, subscribe, share, comment, all that good stuff. And I do have a blog, jctaccounting.com, and that's a great place to sign up for it just comes in weekly newsletter fashion. So, all right, till next time.